So you're new to investing, you ain't got a clue what you're doing, you keep listening to YouTubers that are got loads of money, they're not down to earth, they're not normal, they're not working class. I will show you what to do, alright? So you're new to investing, or maybe you haven't even invested anything yet, you don't know what you're doing, you've got a bit of cash, you're thinking, right, okay, bit like me, you're sick of working 9 to 5, well not 9 to 5, I do 14-hour days, but yeah, you're sick of working, you pay, you live from paycheck to paycheck, it's a load, and you want to make something of yourself. So my investment journey was, I'm a truck mechanic, I'm a proper petrol head, always been into cars, love modifying cars, fixing them, you name it. So I thought, right, Tesla, obviously I knew of Tesla, the way the car industry is going at the moment, everything's going to be electric. So I wanted to invest in Tesla, so I had no idea how to do it, absolutely no idea. So what did I start doing? Watching YouTube videos. Watch hundreds and hundreds of YouTube videos, hours and hours, turns into weeks and weeks and months, and you got all this money. Well, you say you got all this money, you got money and you're gagging to go, you ain't got a clue what you're doing. You ain't got a clue. What do I do? So I watched all these YouTubers, the big ones, Andre, whatever his name is, Graham Staunton, Financial Education, all of them. And I see them making like hundreds of thousands of pounds. And it's like, wow, okay. So I thought, right, let's get in the stock market. What's the first thing you need to do? First thing you need to do is find a broker. So what is a broker? A broker is basically a middleman that you put your money into and you can buy stocks through this broker. I use a broker called Free Trade. The reason I picked Free Trade is because it's in the name. It's free. I find their platform very easy to use. It's very transparent. You get charged £3 for their investment ISA, and you get charged for the FX rate, which is the foreign exchange rate. So if you're buying American stocks, obviously you've got to convert pounds to dollars, etc., etc. So they do charge you a small fee for that. Then there's the other one, which seems to be a lot of people are switching to, which is Trading 212. I have got a few stocks in there invest, Rolls-Royce and Lloyd's, but it's not worth mentioning because it's so small. But I do use that account because they've got something called a CFD account. Now, a CFD account is the day trading account. It's gambling. Don't do it. It is literally gambling. Don't touch it until you know what you're doing. Give it at least 6 months before you even play with that because you'll lose all your money. Trust me. So that's that. So when picking stocks, as a newbie, now you might have a tenner, you might have 10 grand. But I personally don't put all your money in the stock market straight away because this is something that I wish I never done. You could even get both Trading 212 and you could get Free Trade. You could get both. Sign up for both and then put some stocks in Free Trade, put a tenner in Free Trade, put a tenner in Trading 212. Play with both platforms. You don't have to invest in the same stock. Find out which one you prefer. Invest in one of the big, stable companies just while you're learning. The fundamental thing you need to do is learn what you're doing first. Learn your platform, learn what to look for, learn what you want to do. Pick companies that are stable. You are not going to make big money on these companies. End of. You are not. It's just to practice, to get used to what you're doing. So you've done that. So now what you need to do is you need to decide whether you're going to do growth stock or dividend stock or both. So what is the difference between a dividend stock and a growth stock? Well, a dividend stock, you get paid for holding that stock. It depends on the company. It depends on a lot of things, but a dividend isn't guaranteed. So it's basically an income. So after I've got my house, I'll be looking into my pension. When I do that, I'll be staying clear of growth stocks and going back onto dividend stocks. But at the moment, I'm not interested in dividend stocks because they don't make as much money. You can argue all you want. They just don't. There's not that much room for growth on dividend stocks. You invest in a dividend. So for example, Shell. I think I had 100 shares of Shell. Which was over £1,000 worth of Shell when I sold it. And every 3 months I used to get my income. They basically pay you to own it. Every 3 months, I got a tenner. If you're a dividend investor, you're not in it for a quick buck. You're not in it for the short. You're in it for long term. So as a dividend investor, it's just money that you've got spare, for example, and you want to grow that money. So what you'll do is you'll put this money every month away. So what I used to do was I used to say I want to put 150 to 250 pound a month away. It never happened because I could never afford it. It used to be like 50 quid, 100 quid, something like that, as much as I could afford. So I would put that in. So every month you put the same amount in. But obviously the more money you put into it, the more money that you get back. So when I got my £10 off of Shell for my 100 shares, I would then go and buy another Shell stock. So you're basically reinvesting your money. So in the next 20, 30 years, you will have £300,000 to £400,000 in the bank when you retire because you're playing the long game and you're reinvesting your dividends. Now, growth stocks is in the name. You're picking a company that you believe is going to be big. So you're picking a company that you think in the next 6 months, a year is going to grow. It's literally it. You could potentially triple, 10x your money, but you could also lose the lot. So it's more of a gamble. So that's what you need to decide. You need to decide whether you want to be more stable with dividends or you want to be a little bit more full on with growth. So when picking a stock, there's a few things that I do. I use Yahoo Finance. They do a live graph which shows you the stock price at any time, but also they've got a search description. So if you type in the stock, it gives you a news section underneath, and that's the best thing about Yahoo Finance is the news section. So you could type in, for example, I did a video on Boohoo because a subscriber wanted a video on Boohoo. So I literally went onto Yahoo, typed in the company name, found the ticker symbol, and that was it. Went through and it told me everything I needed to know about that company and what had happened in the last year. It was brilliant. So I used that. Then I use another company called Simply Wall Street. These are all apps, by the way. Simply Wall Street is brilliant because it will give you a stock valuation. So they will tell you whether the stock is undervalued, overvalued, or a fair price. That's pretty much the only reason I use that as well. So there's that. That's pretty much all I use, I'll be honest. So once you've decided that, you need to pick a company. Do not invest in a company that you have no idea about, that you don't care about. Do not be in it for a quick buck. Don't be in it thinking next month you're going to double your money. Pick a company that you really do believe in. So what I'm trying to say to you is pick a certain amount of companies and just put all your money in that. Of course, watch the videos, listen to the news, do your research. Everyone's point of view is good to know. Knowing stuff about companies, it's brilliant. You can't go wrong. But don't invest in a company because matey boy has said, oh yeah, in 6 months' time, you're going to 10x your money on this. Don't believe clickbait YouTube channels that say this stock is going to 10x in 5 seconds. No. Now, this is the boring bit, but it's important. Because I did this for the first couple of months and I should have done the sensible thing, but I got excited like you probably are. If you are in debt, pay your debt off. Do not spank all your money investing in like these companies when you've got a credit card with 2 or 3 grand on it and your interest is like 30%. Because if you're paying the minimum on your credit card and it's like 30% interest or whatever, all the gains that you've made in your investments, you're paying in interest on a credit card. Pay your credit cards off. Do you know what I mean? Like mortgage, different. But if you've got loans, car loans, whatever, pay them off first. You're wasting your money. Like all the gains that you're going to make, you're wasting on interest. If you can, get your debts paid off. You don't know who to invest in. You don't know whether to do dividend stock. You don't know whether to do growth stock. There's another way to do it. Go around your house and look at stuff. Just look at stuff. So go in your kitchen, the most common food product that you use, look on the back of the label, Find what company like makes it and invest in that. You're using the product. Why not invest in them? Like go into your bathroom, look at all your shampoos and that. Go onto the back. You'll probably see it's Unilever or Johnson and Johnson. Invest in them. You're buying their products. You might as well own a part of the company. If you like this video, please like and subscribe. It means a lot to me. You know, these videos take a long time. For all the subscribers that are already subscribed that have watched this through to the end, I really hope it's helped you guys. You know, this is my story. This is how I do things. This is the things I wish I'd done. I wish I had just listened to myself in the first place. I've learnt a lot in a year. I've changed strategies so many times in a year, and I've gone from one strategy, I've gone from dividend to growth, and they're just two completely different game players. They're just so different.